Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Dr. Winegarden, Senior Fellow in Business and Economics with the Pacific Research Institute, to discuss how macro factors are impacting the housing market and consumer spending habits. Dr. Winegarden, it's great to have you with us. Welcome to Trade Talks.
Oh, it's great to be here. Thank you.
Let's start with the underlying issue that's on top of mind for all Americans, in fact, around the world, inflation. What are your thoughts about that?
Inflation is the fault of the Federal Reserve. They're finally getting policy right, but the 8 to 9% inflation, we're going to see that start to slowly come down, but it takes a while to get inflation under control. So we're going to continue to see elevated inflationary pressures throughout the rest of the year. When you combine that with the supply constraints and other unique factors, pricing and affordability issues are going to be hurting consumers for quite some time.
Right. And so when you think about Fed policy and how they're going to tackle inflation, what do you think in terms of how much more hikes we're going to get in interest rates, what the ultimate benchmark is going to reach?
I think you're looking at the Fed fund getting to 3.5% by the end of the year. You're talking about possibly even 75 basis points again at the upcoming meeting, or at least 50 basis points. If you get 75 basis points this time, you'll probably see it go 50, then 25 through the rest of the year. But we're going to end up with the Fed funds north of 3% by the end of the year, which is what they have to do if we're going to bring inflation back under control.
And even though they have interest rates as a tool to help tamper inflation, to your point earlier, there's really not much they can do in terms of supply chain and what's happening geopolitically to help tamper that inflation. I mean, is it feasible that it's going to be enough to create that demand destruction?
Well, you have to remember the Federal Reserve can't address supply issues. So when you have a supply problem, that's going to be a negative shock to the economy, but the Fed's just not equipped to deal with it. The Fed's job is to manage the money supply, to keep aggregate demand, within the proper range, and to offset those demand factors. They can't do much to that type of real supply shock, and they shouldn't either. So yes, those things are hurting. There's other types of regulatory policies we could do that could actually lessen that cost, but that's not really up to the Federal Reserve to take care of.
Right. And let's talk about housing for a moment here, because despite rising interest rates, nearly doubling since this time last year, rising unaffordability, home prices have held up pretty well besides that backdrop.
Right. Well, and that's a supply issue. That's when you talk about all the different zoning types of regulations. You actually have a fundamental mismatch between supply and demand in the housing market. And that's why, even though we've seen the rates have pushed down demand to some extent, the supply is even more constrained. I mean, to have that with the other types of supply constraints, it's just not a surprise that prices are holding up. I mean, eventually, as rates continue to rise, and we've seen a bit of a relief recently, but if rates continue to rise, you will actually see an end to the price increases, because that will become a constraining factor. But right now, it's the supply constraints that are the binding factor in this market right now.
Yeah, and part of the supply issue too is there's just lack of affordable housing as well. It's just not zoned for it.
That's right. That's right. And the zoning regulations make it very difficult to build those. So, and it takes a long time. So, if you start in many cities, if you want to actually start building a house, it's, you start the process now, you're not going to get it onto the market for 2 or 3 years from now. So you're really not able to kind of address those types of near-term supply constraints with, building a new supply.
I've also been reading a lot too, and this is more of a social issue than an economic issue, but you have the problem of NIMBY, not in my backyard. It's really hard to get zoning approval because, people, again, they're all for it, but not in their backyard.
Right, that's right. And that's just one of the many hurdles that a developer is going to have to deal with, beyond just the dealing with the local government, possibly dealing with the state government. Now you're going to have to deal with kind of the community. All of this is why it's just so difficult to bring on supply. And that's, it's just basic econ 101. When you constrain supply, prices are going to be higher.
Let's talk about the impact on consumer spending. We know that it's nearly 70% of GDP, and it's the consumer, it's the labor market and the housing market that really have kept the economy together.
Yeah, and what you're looking at is consumers are falling further and further behind right now because of inflation. Wages are growing. If it were a normal inflationary environment, wages are going nice and strong, But when you compare it to inflation, we're falling further and further behind. And we're beginning to see that when you look at some of the retailers in their profit reports or their quarterly reports, that sales are going down because consumers have to economize. And so we really are hitting that affordability constraint for many consumers. And we're seeing a down trading from kind of a premium market to much more of a discount market now.
So, Dr. Weingarten, to wrap up here, do you think we are in a recession at this point? And then how long do you think it could be until inflation is under control and we just start to see a normalization of all these different verticals that are, each one of them in its own can be challenging for the economy?
Yeah, in terms of calling a recession, that's up to the NBER. I mean, we've had the economy declined in the first quarter, very well declined in the second quarter. I mean, we're definitely in a very difficult economy, and that's going to persist. That's going to persist through the rest of the year, as well as elevated inflationary pressures. If we get the policies right, we could start to see some relief, in beginning of 2023 or mid 2023. But we definitely need to see some changes in policy in order to get that good outcome.
All right, Dr. Weingarten, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.